Hey everybody, welcome back. Well, we have a lot to go over, from smart money, dumb money, to what's going on with Nvidia and what's happening with Bitcoin and how to prepare for the Fed tomorrow. So let's just start with the basics. Get rid of all our lines right here. I'm just going to start with the 12, the 22, and the 55. That's what I use as an SMA. You should use whatever you're comfortable with. The most important thing that I could show you about today that I thought was pretty obvious was just how we closed. Now, we obviously had the 20-year bond auction at 1 o'clock today, and we're going to take a look at how that acted. But up, down, 1, 2, 3, sideways action, holds the 12. Look at that close. So when you really go out there and take a look, how many other closes do you even have up here? Just one. So that's already telling you how they're setting up for tomorrow. In other words, they had every opportunity to sell, and they didn't. Japan raised interest rates, and we still didn't sell off. The dollar went higher. Let's take a look at that really quickly. Dollar went higher, and the ES still did not sell off. So all of this data, everything we have going on, two wars, the VIX ticking up, everything, and the ES pushed higher. I think this is really important to get, because what we're seeing is we're seeing constant rotation. As much as I think that we're setting up for some kind of rest or to go sideways, it really appears all I'm seeing is rotation. Here's a really good example, and we'll explain why you're seeing this. But for example, here's Oracle. Now, we talked about Oracle actually staying green as one of the first names to stay green for a period of time after earnings. If you'll remember this, we talked about TTD and how that imploded, Net, CRM. Remember how we were talking about these names after earnings and then how they acted after those earnings? And we saw it everywhere. You could just pick which name it was. It didn't matter. But then we started to see a turn, and we started to see it with Oracle. Well, it wasn't just Oracle that we saw. This was something that we just recently bought, and we're up fairly decent in the trade already, probably around $10. Just did it in the room as a swing trade. But what's important about this is you're seeing the fills. You're seeing the exact opposite behavior that you would expect to see if he's not going to raise or cut rates anytime soon. You would think that you'd see the PE collapsing, and that's not what we see happening. And I'm going to get to this, but stay with me, because this is important, because I'm going to show you what we're going to look like to see how long this could possibly last and to look for signs that this might be turning. But for now, if we take a look at the Nasdaq, which actually is the worst performing one between the two, and we just take a look right here. Look at this. We have a hammer forming at the top of the chart, sitting under the 12 and right on the 22. Now, when I'm referring to it looks the worst, of course, RTY looks worse, but I meant between the S&P and the Nasdaq. So let's take a look at the S&P in regards to the Nasdaq before we go any further. And what we'll do is reset this chart, and we're going to go to let's go to a bear chart for a moment, and then we'll just convert this to a line. Now, I do want to get to these issues, but I do think that this is an important distinction. So if we go just to right here at end of January and look, since then, the SPY's been outperforming the Nasdaq. And I think that's something that we have to pay attention to. Matter of fact, they're actually setting up for the SPY relative to the Nasdaq to break out. Now, this was something else that we looked at, but let's drill into this a little bit more so you can get it. Here we are on an hourly chart, and you can just take a look from that hourly chart. We'll go back to February. I mean, all we're seeing are higher highs, lower highs, over and over and over again. I think it's important, and now we're butting right against that. Now, I showed this on Saturday, but let's follow up with it. Let's look at energy in regards to technology. Now here we can see energy breaking out in regards to tech. We can start to see the outperformance, and now you're seeing the breakout. That goes back to February. If we go to January, you can see you have a ways to go, but you are setting up to break it. And I think that's very important. It's a very important distinction. Energy in regards to the stocks. Now, from February on, we're basically even, but if you take a look from March, energy was the way to go, not semiconductors. So this is the exact opposite of what we're used to, and it's very similar to what we saw in another period of time. Now, from when the market peaked back here, this is when we started to see energy outperforming semiconductors. Well, we're starting to set up very similarly. Now, I'm not suggesting that the Nasdaq's going to collapse. It's not where I'm going with this. But what I'm saying is that if you go from March 2021 on, there was no underperformance by energy in regards to the stocks. And then you have the breakout right here in February. Now, come across to that level and look what's happening. We're sitting right on it, and we're starting to reverse. Now, does this continue? Well, there's a lot of geopolitical things that can happen that could make it continue. There's also things that could just make it not. But the bottom line is, I think it's going up because of inflation in the SPR. We covered this on Saturday, and you're welcome to watch that video. I'll link it at the end of this one. But this is something that we must watch. If energy continues to push and semiconductors continue to outperform, it is not likely that the Nasdaq will continue to lead. And if the Nasdaq doesn't lead, then it's not likely that the markets in and of themselves are going to go higher. You need two sectors to push. Finance is the first one. Finance must always lead the S&P. And it's doing just that. As a matter of fact, JP Morgan just issued an increase in dividend tonight. So you'll probably see that do very well tomorrow. And you're bidding up a little bit. And then we also need semiconductors. And semiconductors are dragging a little bit, even though Nvidia is having what I would refer to as a stellar call. And I have some notes that I would like to review on Nvidia tonight that we're going to go through. But I want to get to the meat of where I see the issue. So the issue right now is, what is the Fed going to do? But you can see semiconductor right here, and we'll just drop these in so we can say we're below the 22. We're completely below the 22. At the same time, people are referring to Bitcoin dropping below the 22 because of Japan. I'm not sure that that's because of Japan, but when you take a look at gold, gold didn't drop because of it. So I think Bitcoin is just doing Bitcoin things, and I really wouldn't try to think of the rhyme or reason or find the new reason it's doing anything. Now, in front of us is CME Fed Watch tool. I'll put the link right up here so anyone can see the link themselves. And what you want to just note is there is a 99% chance they do nothing with rates. And here is a 1% chance that they do something. So Wednesday, 2 o'clock, once we see that, they do nothing. Then it gets into the speech. What does he do with the speech? Candidly, we just really don't know what he's going to do. Go into May. Well, the expectations for May right now of 2 rate cuts is pretty much 0. As a matter of fact, out to May, we're at 3.8% now for a chance. Takes us into June. There is a 60% chance of a rate cut in June. Well, what if it gets pushed out again? All right, and we start seeing it getting pushed out further and further. Now it's not June. What if it becomes July and all that gets pushed out even further? Does the market drop? It will probably come in a little bit, in my opinion, but I think they're going to go after tech if that happens. Again, this is CME Group, and you just want to go take a look at Fed Watch tools. It's a very helpful tool to just understand where everyone's head is. The speech is, you're going to have to focus on his wording. I think he's going to walk back what he said in December, where they were looking for 75 basis points in cuts. And you have a new dot plot that's supposed to come out. And if that shows things out even further, it could be a pretty wild day for the market. So they're the things that we're going to focus on tomorrow, the dot plot, and we're going to also have to focus on what we see happen with the speech. His language is going to make a big deal. His language has made a big deal in the past, and it's certainly going to do it this time. For example, if we go and take a look at the S&P, and we just look at some of the key dates where we've seen massive inflection points, I'll clean all this off, and we can just look at a plain chart. It's pretty clear where it happened, right here, and then you just go back and take a look in December when we saw the other breakout right here. So this is where he said we're not going to raise rates anymore, and in here is where he said we may cut up to 75 basis points, right? He started alluding to that, and that they ran with that, and that became 7 cuts next year, meaning the year we're in now, and now we're out to June looking for our first rate cut. What's interesting about this is, even though we're out to June possibly looking for our first rate cut, from here, where by the time he was done, they were factoring in 7 rate cuts. You come out there and say, okay, it's been 100 days of trading since then. Feels like a lifetime, doesn't it? And you're up 10% since then. So even though the rate cuts and the chances of rate cuts are dropping, the market's up, and that's due to rotation. If you take a look at the Nasdaq as well, it's just been an absolute beast because of earnings. I do like the hammer here. We're going to have to see how that plays out, but there's some things that we really need to talk about before we get into individual names. Now, we're going to spend a little time on this, not a ton, but I do want to just refresh everybody because I get asked about it in the comments. This is smart money and dumb money, and essentially, we don't look at it that way. We look at this as institutional, and we look at this as retail. So cross out smart, think institutional, dumb, think retail. And there's a reason for that. Again, this is a chart done by Sentiment Trader. I put the link right up here, but I have no affiliation with them. It is a paid product. I have spoken to them before, and they're fine with me showing it on here. So, and I want to hammer home this one thing. We've been focused on the spread. I'm going to go through the spread on Saturday. I'm not going to go through it today, but I want people to just be aware of what we're starting to see. When does this really start to affect us? Well, this starts to affect us the most. Dumb money, or as we refer to it, retail, cracks this main line. Okay, forget about back here, right? We can't really look at this because, and we know why, but we'll just draw a line from the 22nd on, and we're not going to look at that. I'm going to cut it over in a minute. But what we want to do is just focus here. Since we didn't have 1.7 trillion right, injected in the market. Let's take a look and say every time that dumb money or retail gets over this 70 and cracks, and what do we say? So here's the first time that we would have done that and cracked. I'll change the color of this a little bit up here so you can say it, and then we'll make this blue as well so that it's not all red. And then we do it again right here. We can all see that. I'll mark that there, and we'll put a little X there, and we'll put a little one here, and then we'll mark that one as well, and there's the line, and you can see how that played out. Again, you can see how that played out right there before pushing higher. Right now, every of these little dips, you're setting up. But what we're seeing as the S&P is going higher, what's happening? As the S&P is going higher, retail's getting out, institutions are getting in. As institutions get in, the market usually drops. As institutions get in, the market usually drops. So if we go and take a look at that and go, okay, well, show me a 1 year. And then we're going, okay, well, this is institutions getting in from June, July. And look at what happens. Okay, they're done getting in. And now retail is going to start getting in. And retail pushes the market up as institutions get out, right? And you can see what we're talking about right here with the X even closer. You break, and you can see that. So we want to watch this really very closely, specifically even tomorrow, and say, okay, is retail starting to panic? I felt like we started to see signs of that today, but candidly, it's just so resilient. And I think some of the reasons is because some of the stuff that is coming out, in my opinion, of this Nvidia conference. I'm going to go through a couple lines of what we're seeing from an investment bank that issued a really interesting report. And I parsed some of it out, and I want to show you. But a couple of things that I think we really need to deal with here that I want to hammer home. The idea that Bitcoin's going to stay here, nobody really knows. If we look at it as any asset class and we just get off the whole cult thing for a moment, this is very simple. Back here, we crossed the 55, 22, and the 12. That's what I use. You should use what you're comfortable with. Here, you broke the 12. You're unable to get above it. It's been 1, 2, 3, 4, 5 days, okay? Now you're below the 22. You need to get above that. If you can't and you start rolling, best case scenario is you go sideways. Usually, if you break the 22, usually within a period of time on something like this, you test the 55. You broke the 22 here, you tested the 55, and I'll find a litany of places back here where you're breaking the 22 and you're testing the 55. It's over and over again. It's usually about 2 to 3 weeks before it happens. Sometimes it'll take a month, but you can pretty much set your watch to it that that's going to happen. So now we know that this is going to happen, and that takes me into MicroStrategies again, and I just want to review this. This is something that I'm short. I shorted it today. I was short last night. The short that I put on today did not work. I reshorted it again. It might not work again. And you know what I'll do? I'll find another way in and I'll short it again. This is pretty insane, this valuation, when you walk through it. I walked through it yesterday. I'm not going to walk through it again. What I do want to say about it is it's very clear when you have a day like today and this is getting absolutely smoked and you rallied up, that this is very simply short covering because they made a killing today. My best trade, candidly, was just coming in off the open and closing the darn thing, right? Not even adding to it. That's where I lost. So it's pretty interesting to see. What else is pretty fascinating to me is after hours, you're already starting to see them go after it. So it looks to me like they're waiting to when they don't have market risk to put the trade on and then just deal with whatever happens in the morning. And we can see that real clear right here where you closed at 1417 and now we're at that 1382 level. Now, anything can happen overnight, but I'm clearly leaning, no matter what happens with Bitcoin, that this thing is pretty overvalued on a fundamental basis. And I'm not going to tell you to just randomly short something or stay or have a short bias because the market can stay irrational longer than we can stay solvent. So what you do is you just watch the high of this and you see how it goes and you go from there. And this is going to segue into something else. If we take a focus on SMCI, we're starting to see these secondaries all over the place, aren't we? And here comes SMCI with the secondary. Well, the rumor is that they couldn't find anybody off the open that wanted to take the stock down. And that's not overly surprising considering where you're at right now. They tried to do a secondary, they did a secondary, and they just can't find anybody that wants to get involved at this level. I don't think that that's crazy. I truly don't. So I do think that we're starting to see that point in the market where the leaders are breaking that 22-day moving average, and we have to watch that. Is that going to continue? I think a lot of this is on the Fed, guys. I really do. And the Fed's going to move the market. Now, from my perspective, we're better off taking a look at the energy names, but the energy names don't move 100 points a day, and that's what people like to play. So me looking at this stuff, I get why you're not paying attention to it. But I would pay attention to when institutions don't want stock anymore, retail cannot say, "Oh, I'll take it," or "I'll hold the water." It can't do that. That's going to be the problem here. This is what you're going to run into. So I'm going to keep doing where I'm showing trades and showing the trade Zella and things like that. But I want to get back to some of the old school videos where we start planning and plotting these days a little bit better. I just think that we got a little off track here with some of this. You're always welcome to comment on that, but I don't want to get into that every single day. But if we take a look at how this is playing out right now and just look, well, that's a pretty great area, right, that you're trapped in. And you're probably going to bounce around in here for a while, and you're probably going to build right inside what? That control bar. So I don't see the impetus or the hurry there why an institution is going to feel the need. I understand why SMCI wants to raise the capital, and they're doing it really on the back of what you're seeing with Nvidia. Now, Nvidia had some really key areas today. I have them marked off. You might want to take a look at these because I think it's pretty poignant. We're going to go to a bear chart here and drop this down. But you can see right in here, this 895 area. Now, there was a level up here at 903 where you just could not get out. You have a seller right there, right at that 903 level. You can see that reversal right there. Just watch that tomorrow for those that are playing it. You can see the 885 and how you kept bouncing, and finally did exceptionally well with it. Hindsight's a beautiful thing, isn't it? You can go back and see how you fought over and over and over again on Nvidia and the VWAP until it finally pushed. That's why I always tell people when there's too much noise or there's too many shots at it, just go to a 5-minute chart if you're day trading. About 25% of what I do is probably day trading. But when you go to like a very simple 5-minute chart and the one's tearing you up over and over again, I was long here and it was just tearing me up. It was over and over and over again, 15 minutes of not breaking it. I blew it out, took a loss and just said, when it finally gives me like a resounding signal, then I'll give it another shot. You can see the 5-minute full close over there and the higher high. And if you waited for something like that, even though you had to wait a full hour, I know, God forbid, you can see that pretty much marked the low of the day. Nobody knows it's going to do that. No one knows it's going to gap fill. And you really pushed right into that 1 o'clock bond offering that went exceptionally well today. So I did expect follow through in the market due to that. And frankly, we didn't get that. The conference call overall that they've been having and this conference they've been having, shouldn't call it a call, but it's been going really well. Now, if you go out here again and put the simplest of, well, let's just use these. We'll just use these lines. I was going to put some oscillators in, but let's just stay with this. So here we are. Where are we? We're back above, and I think that's pertinent. Let's just make sure. This looks a little off. Let me just double check it. 12. Nope, 12. So, all right. So you're sitting right there, and now you've pushed, maybe because it's white now in the black background, what's throwing me off. Anyway, you pushed, you're closed over, and here we are. And now we're seeing some semblance of a reversal going into that. But of course, we have the same setup here, don't we? We have this bar that's in charge. So now we know what bar is in charge. I do want to go through a couple things here that I thought that are relevant. So I have 3 charts in front of us. I can't show you the whole 15-page report, but I want to take 3 slides out of this that I think are pertinent here, and I think could help you understand what's going on. So this is Nvidia currently trades at 35. And NTM is a super technical term that investment bankers use. Next 12 months. But it sounds fancy, doesn't it? Next 12 months. Every time you see that, 35 times next 12 months. I mean, they could just say that, right? Street estimates consensus of EPS or 19% below its past 3-year median. This is where it gets interesting. Nvidia is expensive. And this is when someone like me will say very coyly, is it? And then you have a 3-year median, and this is your 3-year median. And this is where we are. Okay. So on a relative basis, going back, to 17 to date, is this expensive over the past 3 years? And the answer is no, not even close. Okay, I think that's very important for people to get. A matter of fact, Nvidia, that's when you'll hear people say, actually, Nvidia is cheaper now than it was in June. And people don't understand that because of the growth of the company and the earnings. Something to keep in mind. There's 2 more slides that are really important here. And I just want to point out a couple things that I think can help. I don't think people fully understand what's going on here, so I'm hoping that this will shed some light on it. So this is a B200 Tensor Core GPU based on the next generation Blackwell architecture. B200 GPU will have 208 billion transistors. I could walk right into a transistor, I wouldn't even know it. 2 reticular limit dies connected by the boom, boom, boom. Okay, I'm not even going down that radar. We have people in the room that know exactly what they're talking about. Let's get to the part and the layman part. Expected to deliver 4 times faster training and 30 times faster interference when compared with the H100. Okay, what you just bought is now obsolete. Now you have to go here if you want to play. So all these companies that are buying these chips, you're in an arms race. And you have to understand you're in an arms race. And that arms race is going to continue until what? Until it doesn't pay off to be in an arms race anymore. Right? These companies have cash. And they're going to keep spending that cash to be in an arms race. And the arms dealer is Nvidia. It's really that simple. All right, so no one wants someone else to have this and them not have it and not be able to compete. And that's really what it boils down to. No different than ARMS. No different at all. X800 series switches, Quantum 800. You can see it all in here for yourself. I'm not going to bore you and even pretend that I could tell you what all this means. See the word switch, you see these words, got it. Okay, this is 5 times higher bandwidth capacity and 9 times increase of in-network computing with Nvidia. Okay, initial adopters of these switches include Microsoft, Oracle, CoreWeave. These switches will be available next year. So you already know that you have buyers for these. You already know that it's going to do 5 times higher bandwidth capacity and 9 times increase of in-network computing, right? We can all talk about what that is and how fantastic it is. It doesn't matter. They need it. Therefore, they're going to buy it because they want to compete. Again, think of it like an arms race. It works until you don't need it anymore. Now, here's something else. Nvidia only trades at a 17% premium to the medium stock in their coverage universe. The coverage universe in question is semiconductors, right? And the semiconductor space that they're talking about, which compares with a medium premium of 160% over a 3-year look back. So they're used to 160% on a 3-year look back. NTM is that technical term that means next 12 months. Nvidia's next 12-month PE relative to the median stock in our coverage universe. Here we are up here we are down here. So not only is it historically cheap in regards to the entire sector, as we showed earlier, right? As we showed that not only is it relatively cheap to itself to buy it, but to the other stocks that are in there, it's cheap to them as well.